Hey guys.
Hey GARLAM, how you doing?
Hey, morning.
Just before we get started off, I think I want to congratulate everyone here for surviving 2022. We've had Luna, we've had Celsius, we've had FTX, we've had Genesis, Gemini, all kinds of things blow up this year. And the fact that you guys are all here, congratulations. You somehow managed to risk, or you somehow built up a courage after all of that to come out here. So congrats. I think we're going to get started. I think there were some preset questions that were given to us. We didn't like them, so I just completely rewrote them all. So just bear in mind. Yeah, so with that, you guys are all being VCs and, seasoned investors in the space. I kind of want to start with the investment landscape, right? I think, previous kind of fireside chat mentioned as well, the investment landscape has changed drastically. The capital has dried up, with all of the things going on in crypto plus macro. Just want to kind of start off with, how you guys see investment, like investment opportunities before versus now, and how that has, how your thesis has changed since the bull market and since the bear market started. So why don't we go with John first?
I knew you were going to pick me first. How's it changed now? No one's doing any deals, right? So even if you're trying to do a deal, like we have a couple that we're trying to do, I think everybody's sort of in holding pattern mode at the moment. And that makes a lot of sense, right? Because the market is changing on a regular basis. The impact of the FTX collapse is still playing out, right?
What about the thesis-wise? Like you have your own thesis, right? Obviously in the bull market, we as an investment firm had all these theses that were disproven in the bear. And I'm wondering if you guys had that change on your side as well, in terms of
yeah,
how
I think most investors now are looking much more sort of infrastructure plays, DeFi still. I think some of the more outrageous things, like some of the sort of play to earn gaming, some of the consumer kind of products are a bit less interesting because of the function of it being a winter now versus a very sort of bullish market previously. But I still think that good teams that have a proven track record of building can still raise capital, but obviously it's much harder if there's just like three of you who are starting a play to earn game in Southeast Asia or try and do some kind of consumer play, right? That's obviously quite tough. I think most investors are looking for things that are going to build the foundations of the next products, right? So whether it's like a scaling products or sort of app focused chains, or this is the kind of thing that I think most VCs are looking at. In terms of us, we're still looking broad. So there's a couple of projects that we're looking to close deals on that are in the more consumer and more gaming focused area. But again, it's because the teams that are doing them have shipped products previously, right? And I think that for us, that's always going to be key, whether it's a bull market or a bear market, or if you have builders that can build, then you're always going to try and sort of get a deal with them. Really
perfect. Any of you two have a?
Well, I probably want to start by clarifying that Chainalysis is not a VC in investment.
Not yet, anyway, right?
But yeah, I mean, we are a data company, and we do talk to a lot of investors, a lot of projects that are coming up. Yes, it's the climate has changed, but I think one of the things VCs are doing is trying to clear the FUD on what's real and what's really happening in the space, right? Firstly, FTX, if you take FTX as an example, it's not a failure of blockchain, it's not the failure of the technology. It's really down to human a failure, right? A failure of the system. And so I think, once they come to realize that, then they're going to look at projects that really are fundamentally sound, and they will want to make sure that there are proper risk managements in place, proper processes in place. That's going to be something that they look at. And I think the part about being FOMO has kind of died down. In a bull market, everybody just wants to jump in, because if you miss the boat, that's it, right? So what kind of due diligence is actually being done during that kind of bear market is questionable, right? But I think in a bear market, things are going to be much slower. They're going to learn from the lessons and make sure that things are in place, right? The human processes, the way that a multi-million or multi-billion-dollar company should be run, those processes are in place. Yeah.
Well, we look at it from also a different perspective to you guys. We're an infrastructure project, and so we're talking to funds regularly, and what we're hearing more of today is, how are you going to make money? Where are your customers coming from? Where are your revenue streams coming from? And we're hearing this more and more over, opposed to where we were 2 or 3 years ago, which is how you're effectively going to build a community, which is a crowdfunding source, which is going to push the price of your token up. So we're seeing this whole direction move towards more traditional type investments in technology, as I said, customer bases, revenue streams. How's that actually going to pan out? Now, I'm not saying at the same time that I don't think there's going to be another bull run for token holders. I think there's still some life left in that game. And profits also from a project can be diverted into the token holders as well, buyback schemes and so on and so forth. So the two can be linked, but there can also be conflict there between equity investments and token holders. And that's going to be the new balance that needs to be struck, I believe, that we're going to see over the next 24 months.
Yeah, I think I think I can relate to a lot of the things that you guys mentioned, especially on the revenue side. We've been kind of focusing more on the visionary founders before on the bull market, where they have vision to increase it up to 10 billion, 50 billion, 100 billion, versus now it's like, we don't care what the valuation is. We want to know what your burn rate is. We want to know what your cash flow is, right? So I think that has changed dramatically. You touched up on something really interesting, Joshua, where you mentioned, I think, processes and systems that failed, basically, entities like FTX, and we have been very scrutinizing a lot of the processes and systems that these first-time founders, a lot of times first-time founders have. So I want to wrap this question with the regulation side as well. So basically, with the whole implode of, many of the firms that we mentioned in the beginning, what do you guys think will the regulation processes and systems within the company itself will play in the coming next 2 years, 3 years, for the next 100,000 million startups that are gonna come into the space? And then for you guys specifically, what would you guys be looking for in order to kind of validate the success of these startups based on those new introduced criteria like regulations, systems, and processes?
Yeah, I think regulation is definitely specific in this space, still behind, right? The technology and the innovation has moved way beyond. Just to give you an example, right now the regulations probably focus on a central exchange and what happens there, but people are already moving on to DeFi and NFTs and metaverses, right? So that the regulation is actually behind. I think you look at regulations from both sides, like what you mentioned, right? What the regulator is looking at, and internally as a company, what they should be looking at. So I think, a lot of projects that we speak to as they are starting up, the mindset is always about customer acquisition, right? We are just going to build, we're just going to acquire a lot of customers. And I think that mindset has got to change a little bit, and will change because of regulations that's going to come from the governments. They have to look at building from the beginning with security in mind, with governance in mind, with compliance in mind, because then you're going for the long game rather than for the short haul. And I think if companies have that in mind, obviously when they speak to VCs, it has a better story to tell. I think from the regulator side of things, one thing really we want to hope to achieve with the regulators is a bit of a paradigm shift. So don't regulate this industry as how you would with traditional finance, right? But with blockchain as a powerful technology, there's a lot of things that they can do that they can't do in traditional finance. For example, all transactions on the blockchain is transparent, right? So when it happens, actually the central bank has ability to do surveillance and to know that a transaction has happened, right? They don't have to depend on the exchange to report to them or to audit to them, and that takes human, kind of effort, that takes cost, that brings up the cost of compliance. But if the regulator can leverage technology, right, because it's blockchain, then that can reduce the cost of compliance, the effort that they do, and like what Kun Top mentioned, right, it doesn't hinder the innovation because it makes compliance much easier to achieve. I think that's one thing that we hope the regulators will keep in mind, is that this industry is, with the power of blockchain, has that capability for them to do surveillance in a different way than traditional finance. Yep.
Anything you guys want to mention, or?
I think it's such a tough situation because there's only so much that you can do with law anyway. And for example, like I think you're going to focus on the big companies first, like you say, Joshua, like exchanges, basically where the capital is flowing from fiat currency into crypto is an obvious first step, and you already have that, right? But even that's difficult to do because you have a user who's in Thailand, a bank account in US or somewhere else, and it's very tough to, governments don't work together very easily, and that's a very fundamental part of what crypto is. And obviously, you've got smaller companies that are coming through. So I think there's always going to be folks who are asking for more to be done, and also governments move very, very slowly too, right? So I think regulation is obviously a big topic, but it's such a tough thing to get into, and so I think it's going to be a topic of conversation for like a long, long time. They're never going to get as much as people want, perhaps.
Yeah, I think John makes a very good point, but just to kind of further that point, until the United States sets out their regulatory framework, the majority of other jurisdictions around the world will be afraid to. And for the key reason that if somebody comes out the gate before the US comes out and they set their framework out and then it runs counter to the framework in the US, then you can have instances such as someone effectively doing something wrong in one country, or doing something right in one country, and doing something wrong in the United States, and then becoming subject to extradition orders and things like this. So I think there are many countries around the world that are holding back at this moment in time and only setting out a light touch framework that focuses on, as John said, the point at which fiat is on and off-ramped in and out of digital assets, which is kind of focused around KYC and AML procedures. And it's a real light touch affair. And they're waiting to see what the US does. The worrying part is that if there is some regulatory overreach in the framework, where let's say the SEC comes out and they say, no, the majority of altcoins are actually securities, they're speculative instruments, they're not actually utilities, then that could have a stifling effect on the industry by draining out the retail investment double quick. So I think there's a danger there, and a balance ultimately must be struck.
Thanks. So I think I heard something that I want to dig up a little more on, which is that you mentioned that blockchain shouldn't be regulated like the TradFi because it's more traceable. It's more like you don't have to do as much human work to trace those money. That is true to some extent, but it's also not, which we kind of figured out with a lot of these incidences where, I can also kind of give an example from the recent days where, we've seen all these exchanges and, mostly exchanges kind of provide the proof of reserve as, like that became a trend after FTX blow up. So you can have, if you're looking at a balance sheet, right, you can have the equity side and, value the company at that, but it's not going to be the total, the asset side. The asset side without the liabilities does not represent the total, EV of the company, right? So I think we'll always have that, level of the fog that kind of like we can't see the companies as full extent. And I think that's where the on-chain side kind of evolves and tries to track more and more and more of, how these companies behave and how we set standard as a Web3, participants, right? So I wanted to maybe ask you guys on how you guys think on-chain, today will evolve in the future, given all the things that we've experienced so far, and where you would want to see on-chain analysis and on-chain due diligence to kind of evolve into in the next year or two.
It's your space, right? Absolutely.
Well, I think ultimately, right, we have to look at both on-chain and off-chain. If you look at traditional finance, I think a majority is off-chain. I think that, it's 100% off-chain, sorry. So what I meant by looking at it differently is we got to tap the ability of on-chain data, right, and make things much faster and easier. If you look at, proof of reserves, now that's primarily on-chain data. If you look at liabilities, that could be both on-chain and off-chain, right? But if we see and able to monitor the wallets of, let's say, an exchange, we can see the movements, and let's say the regulator can say, well, I require a certain minimal asset, right? A number of asset in your wallets. They can track it online, real time. That's something that they can't do in traditional finance. So, leveraging this type of technology make things much easier, because that means that as an exchange, I don't have to keep declaring the movement of funds. The tricky part is really the intent when funds move, right? So if you can monitor a wallet and you see a fund move, the on-chain data tells you that it has moved, but it doesn't tell you the reason why it has moved. And that's where the SEC or the regulators would need to come in and add in, right, and ask and require certain declarations. I think what we would see is a lot of leveraging of this data, not just for compliance. I think in the blockchain space, you can use the data for business analytics, market analysis, even for investors, right? So the on-chain data doesn't lie. It's now having the ability to analyze it and then tap it for good users as well. I think that is also a part of the space that hasn't really been explored to its full extent. We have companies like Nansen that does that for investors, for retail. So we need more of that to tap on that data, because it's a huge amount of data. Every transaction is recorded, right? That's huge. That's a huge amount of data. Yeah.
Yeah, it kind of feels like a blessing and a curse at the same time, right? Because you can see all this money moving, and you think, there's accounts on Twitter that you can follow where it says, this amount of money is moved from this wallet to that wallet. And so that kind of transparency is crazy. But as Joshua said, right, you don't know why it's moved. I think a lot of people they jump to conclusions or reasons about why something's moved somewhere. So it's like we're so close to getting there, and there's a lot of great companies that are adding like context, adding clarity, and helping us to know who is doing what, right? But intention is, as you said, like is a really key part that is going to take some time to get, I think.
We could take that a little bit further, couldn't we? If we're honest about it. If we're really honest for a second, the majority of the volume that you see traded on CoinMarketCap every day is fake. It's wash trading between exchanges to pump up what their value is. If we can just have a really honest moment here. And so there is some serious and real concern from regulators in the market going, we know that this isn't real, and we need to put a framework around it that's actually going to protect users. Because what we saw at FTX other than them just blatantly abusing customer funds, was actually presenting an asset base that was their own token, that they were effectively propping the value of up by wash trading it to justify liquidity in it when there was no real value behind it. And until these things stop, and this is where one part of where the regulator's concern is, ultimately that will give consumer protection so that crypto doesn't become a zero-sum game, which is what the past 6 months has proved for it to be. And that's what's required for us to see real inflows of capital from some major players that act as the bedrock to the industry and allow us to grow safely for the foreseeable future.
Yeah, maybe I'll just add to that, right? So just to put it in context, yes, definitely a lot of wash trading, but if we compare that again to traditional finance and stocks exchange, that happens as well, but it's much more difficult to identify and then to prosecute. You know, I've known of case, right, where it took about 7 years for them to really, prosecute, and the case wasn't that strong, right? But it was just a lot of insider trading, a lot of collusion. But with blockchain, I think it's much faster. We have that chance to do it. But yes, it definitely happens, right? We know that. But it's how we're going to make sure that we can do it faster, we can catch it faster, and then make certain decisions really quickly to safeguard consumers. Yeah.
Got it. Is there like a startup? Is there on-chain feature? Is there, because we talked about a lot of these vague like intent. We talked about the ability to perhaps be more transparent with the volume. But is there qualities of certain startups, or is there different functions that exist on chain that doesn't exist right now that you guys would want to see in order to kind of draw this future that you guys all are talking about here?
Well, maybe for me, I think right now a lot of the focus are on financial products, but I think with tokenization, right, it opens up a lot of areas. People are looking at tokenizing property, tokenizing different types of assets, carbon credits in this kind of space. Identity is something that I'm looking at, right? Because Web3 and decentralization, the talk is about owning your identity. So if we can...
Right, sorry. With identity, obviously, it might, deter a lot of the bad intent because they have an identity on chain, right? Okay, sorry, go ahead. Yeah.
Having that identity on chain, and again, I don't have like the whole picture of it, but I'm just thinking like this is one area where, if you can put identity on chain because you own it, and then you can control the interactions that you have. Now, that's a very powerful thought, but it also means that the infrastructure and the platform that you built this on has to be the most secure ever, right? Because you're talking about privacy and a lot of things that can happen when things get hacked. Will we get there anytime soon? I'm not sure, but it's just that possibility, right? That thought of, having your identity either as an NFT, that it's yours, what it's being used for. So when you go to the doctor, that's been interacted with, the blockchain systems in the hospitals and things like that. Just if you talk about on-chain data, beyond the financials, right? There's so many other things that can be put in there. Yeah.
Yeah, I suppose just adding to that, because I think that's absolute spot on, is how you can identify the wallets and the assets that are moving, but then putting a layer of privacy in front of it and only giving access to that identity in a permission state, and then potentially that wallet, I'm shooting from the hip, just off the top of my head, and all I do is this all day long, is then you actually begin to risk score that profile of that asset movement. And then that will give you access. It could be cheaper, or it could be faster, or it could give you access to different routes and institutions should you be able to meet that criteria without kind of giving that identity up. Maybe it's something we should talk about.
I mean, you can see the interactions, or this particular identity has logged into all these different services. You don't know who it is, right? Until that person gives you permission to see who he is. But at least you can, risk score, you can see what this person has been doing. Yeah. And I mean, that's what's happening on crypto. You can see the wallets and the exposure of those wallets. But if you relate that similar power to identity, right, or even to services, the possibilities are pretty endless. Yeah.
Sorry, just to kind of summarize that, and perhaps that's where we need to get to in terms of, because when we talk about intent and trying to understand the intent and trying to dissect the intent, it's almost impossible because how do you understand that with unless you know the person themselves, right? So maybe the solution is to create a structure, system, regulation like DID, decentralized ID, where you don't have to police that intent. You have a system and a framework where you have those people working in that system as themselves with their identity, where they police themselves because they have things to lose. They have to risk things that, if they want to do malintent, they risk their identity, right? So maybe that's the structure that, we can kind of strive towards. I think we're running out a bit of time here. Last question. As we are all, participants of Web3, we're all striving to make this space a lot better. And from an investor point of view, from analysis, and from a company founder point of view, we have a lot of builders, we have a lot of investors, we have all different kinds of people here. What would you want to see? What would you want to see, and what are some of the parting advices for people that are staying in this market? Because this market drags on for the next year or two. I've been in on the 2017, 2018, 2019 bear market. There's going to be, we're not going to see probably half or more of these people remaining in the space if this market drags on. So just want to kind of see from your perspective on what they should do, what kind of things that they should look for, what kind of things that they should, build. Anything that you guys want to kind of talk about in order to keep the people in the space, would want to hear your opinions on that.
I mean, it probably sounds like a cliche, but the tech, right, is focus on the tech. So, you hear these memes, I'm in it for the tech, right? But that is what blockchain is about.
Blockchain, yes.
Absolutely. Because, I mean, it's incredible. You can send, a token across the world so quickly. There's an incredible system, and as we talked about some of the benefits of how transparent transactions can be, and you could build credit scoring, and you can have ID without having to store your passport on some server somewhere, right, which gets hacked often. So in terms of the actual tech, it is fundamentally unlike anything else that we've ever seen in terms of what it can do, right? And I think it's just tapping that in certain ways. There's a whole load of things that we haven't seen come through yet, like, for example, tokenizing, whether it's real estate or like artwork, or this is coming through now, right? But it's still very early days in terms of adoption. So I think there's a whole load of cases out there of using the tech, which I think is amazing. I think anybody who's curious about crypto should obviously buy some crypto and to use crypto, because just that,
what would you recommend?
Having a wallet itself is just it's a crazy experience, right? People don't understand how it works. Like, oh, who owns the wallet? You say, you own it. How do I access it? Well, you can use any of these services. It is fundamentally unlike anything else that we've seen before, right? And I think folks that work in tech, and this is the hard part. This is the difficult part about seeing, FTX burning down and these bad actors making crypto look bad, and you see these media stories saying crypto is dead, right? Actually, as we discussed, already on this panel, that's down to the humans that were doing that business. It's not about the tech. So I think trying to get more people who are experienced and building products, who know things about business, to actually just use this tech, right? Whether it's folks in Silicon Valley or folks here, right? And then just to see how the rails of this tech can be applied to whatever their focus is. I think that's hopefully what we're going to see in the next 2 years plus. And obviously, the market's going to be much quieter. There's less people trading to get rich quickly, and that's obviously difficult for some folks. But I think on a longer term period, it's not a bad thing, because people will again look at the tech, how they can apply it to their area of focus. So my hope is that, yeah, folks will actually dig into the tech much more than, oh God, I'm going to go buy these tokens and do like 100x, right?
Well, for me, I think I do agree with Kun Tok when he said with all these incidents, we are kind of set back a couple of years in this space, right? But we're not set back by the technology, right? The technology has gotten actually better. I think we are set back by the element of trust. The trust in this industry, and it's a new nascent industry, which a lot of people do not understand. So I think my advice would be, build with trust in mind, right? Start building with trust in mind, and that means, right from the very beginning, you think in terms of security. When you're building smart contracts, you're making sure that it's audited constantly because you want to build trust in your system. You're looking at security, cyber security, making sure the infra is secure. You're building policies, internal policies and processes that make sure that there's no insider hacks or insider trading that could happen. Things like this, right? Build it with trust in mind, because really I think this industry has to start rebuilding that trust once again, so it's not speculative, but it really becomes an industry that really can make a change, right? A really meaningful change, and not just what we've seen in the past few months, right? Yeah.
I think I'm going to quote Top again. It seems like everyone's favorite thing to do today. He picked up on a very important point earlier, which is what is the next bull run going to be? And I couldn't agree more. It's going to be institutional, and one part he did miss out, it's going to be enterprise. Our team has just spent the past 4 weeks doing the London Circuit, 2049, Digital Asset Week, and so on and so forth. We also advise a number of large-scale household names, and there's one common thread that we come across regularly, and that is they have absolutely no idea what they're going to do with blockchain, but they know that they want it. So to answer your question, very much the next 12 to 24 months is about education, explaining what this technology can do, how it can be useful for them, and then how they can integrate it with useful product. And that's, at that point in time, is when you're going to see the next wave come in, because it's accessing these enterprise and institutional customer bases, which is not tens of millions, but billions of customers around the world flowing and using this technology and flowing into digital assets. And to be able to achieve that, we need to educate these guys on what it's all about and how they can use it, so they can build it, or we can build it with them, and their customers can access it.
Perfect. Thanks, guys. I think that wraps it up. Thank you, everyone.
Thank you.